Good morning. It's Friday, June 13th, Friday the 13th. So something really interesting, well, something ironic here is that I took the bandage off because I couldn't function anymore. There's an arrow pointed right to the finger where they did surgery on there, and then there's a line going across the finger where they did the incision. And what's that tell you? That the surgeon, he pointed to what the correct finger was that he was going to operate on. And if you get the chart pack that I put, you're going to notice a lot of things. One, arrows where there's critical points of inflection, things to pay attention to. And then also, there's a lot of trend lines that are critical support and resistance levels. So the surgeon takes the same approach when he's doing his surgery. And what I'm telling you is, become a surgeon in these markets and really master some of the technicals and look at the chart pack that we send out here on a day-to-day basis. So in light of the recent geopolitical overnight developments, I can't stress also enough the importance of having a futures trading account. Our clients were highly engaged in a volatile overnight trading session here, and in light of what is going on with geopolitics here, while US equities, mining stocks, ETFs, they're either closed or experiencing low liquidity. So if you're interested in opening up a futures trading account, please reach out to the team or send out an email to info@bluelinefutures.com. So again, I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So overnight, it's shaping up to be a busy Friday here as traders, they assess the market risks heading into the weekend. Stock futures are down, oil prices are surging, gold futures are surging, the most in 3 years following Israel's strikes in Iran. Safe haven assets like gold and again, the dollar index here, all surging on this heightened demand. So you got the dollar index here pushing higher, 97.99. Not saying that the dollar index is going to, break out, reverse its trend and things like that. It just, where are the flows going here? Because we're not seeing any flows into the bond market, so they're not looking for that type of safe haven. They're looking at the dollar index, they're looking at oil, and they're looking at the gold market here. So one thing I did talk about a few weeks ago was Goldman Sachs, they did a report, and it was called The Strategic Case for Owning Gold and Oil in Your Long Run Portfolios. And if you look at the 60-40 portfolios that a lot of people have, 60% equities, 40% bonds, they really underperformed over the past few years. And what they talk about is adding small slivers of gold, of oil into those portfolios can really hedge against things like geopolitical tensions, rising inflation, times of uncertainty, times where the Federal Reserve is easing, recessions, things like that can type of insulate a portfolio just a little bit better here. So checking on the data, looking at the S&P 500, well off the lows of the overnight session. And if you were interacting with me at all last night, a lot of people were coming in, they were buying some of the dips on the US equities as they had washed out to some of the support levels like 59.80 on the September S&P. The low of the overnight session was 59.79. Now a lot of people are looking at these dips as potential entries here for a longer term run on the US equities back to potentially the contract highs here. I believe that's still the mentality as the dip buyer is quite active at the moment. However, if you do look at US equity stock funds and equity outflows, they are starting to cash in on this rally here. So we saw US stock funds, they recently faced their largest outflows in nearly 3 months. That's according to data from Bank of America. Approximately $9.8 billion was drawn from US stocks here in the week ending on Wednesday. So that was marking the highest amount in 11 weeks. And if the benchmark returns to its previous peaks within the next few weeks here, you're gonna see, and it's gonna represent the fastest recovery we've seen after a decline of 15% since at least 1980. So the dip buyers have been really active on the retail side. But as you get closer to contract highs, all-time highs, it's natural for some people to take some of the positioning off. Will today's developments and the overnight developments, will that spark more of an outflow? Possibly here, but I still think that the chart pattern still indicates that some of these markets are still probing higher. Something else that was funny too is I was sitting at the clubhouse last night and one of my friends was like, what is the probability that Israel strikes Iran and shuts down the Straits of Hormuz? At that exact moment, I was reading a JP Morgan report, and it says that a 7% probability of something that has never happened. And they actually talk about, and they break down what the probability is. So the Straits of Hormuz is really important because 20 million barrels per day accounting for nearly 30% of the world's oil trade transits through the Straits of Hormuz, with 70% of it going to Asia. So if that gets shut down, you'll probably see WTI really accelerate higher here, because they're going to have to scramble to meet those demands here. And we are still flush with quite a bit of crude oil, and we trade to a discount to the Brent crude oil prices. So you did see crude oil futures really rally in the overnight session here, going up about 13%, getting up to 77.62 from the low 68.49, trading in the middle of the range right now, so up about $5.84. And if you look at the curve here, the farther out you go, the cheaper that oil gets. So if you got to December, you can see it's at $67.30, and the front month's at $73.88. Well, why is that? Chances are this is a flash in the pan type of event. We're not really anticipating this broad into wide scale. You can see that the US is denying any participation. Trump is urging Iran to make a deal. They're really trying to de-escalate things. And that's where you want to keep an eye on some of the markets, like the gold market, the crude oil market, the dollar index here, and then US equities, and look for that curve and that shift where the market goes back onto this risk on because of the dip buyers being so active. Now, if you look at silver and you look at copper, silver has worn two hats yesterday. It really didn't know. It was invited to two different parties here. It was invited to the risk on global recovery here and risk assets, copper, platinum, and everything else. And it was also invited to the safe haven demand party down the street. And it didn't know what to do, so it stayed at home. So you got silver prices unchanged here, 36.28. You got copper down 11, which is getting down to some of those levels here where it starts to get interesting at different support levels. One of the clients I was talking to yesterday about the platinum market, I was saying that if you look at, a decade back where platinum had gone, or even been to 2021, it shot up to $1,300 in a blow-off top type fashion, and then crashed and burned after that. And I said I wouldn't be surprised if it didn't do the same thing. Probe the stops over 1,300, hit some of those, and then correct hard in the next day's session. So you got platinum futures down $38 at $12.35. So we want to look at where those critical levels of support are for the possibility of some kind of tactical trade in the platinum market. We're also looking at the copper market. Silver futures, if gold starts to give up its gains, frankly, could be down 30, 40, 50 cents. Looking at the tactical ranges, and we publish these in the Metals Edge here on a day-to-day basis. So the July contract could get down to 35.93. That's on a volatility adjusted basis. We break there, 35.46 could be the next level, and then about 34.98. So a lot of people are looking at 35 as that breakout point. Now the market kind of trying to figure out what it's going to do. Doesn't have the firepower to go to 40 because, frankly, silver is really dependent on industrial demand and things like that. And you start to get people going, whoa, there's a conflict going on. We're going to take a step back from really being aggressive in buying things, et cetera, that are things that need silver, need other rare earth elements, and frankly, look to wait on the sidelines before going back into that market. So you get the gold-silver ratio rising. It's about 95-1 here, and I talked about, when you get above 100, that's really when there's a market disruption. So as it trends higher, we're seeing that obviously this conflict here that's going on right now is what's called a market disruption. How long the disruption goes or lasts, or does it continue to have contagion and spread out through the Middle East? That's another question here. So we want to just continue to monitor some of these markets. Again, U.S. equities, they're still starting to climb a bit higher. Bitcoin coming down, testing that support level, 103,000. Had some people coming in last night, reaching out to me, adding some Bitcoin, adding some U.S. equities, adding some of the other markets out here on this dip, looking past where we're at in this conflict here, and then moving on to where the economy is going. Now, if you look here later on in the week, we're going to have things like retail sales, industrial production. We'll have an FOMC meeting. We'll have a press conference. I can't wait to see Trump's Truth Social after Jerome Powell says that he's waiting on, tariffs, inflation, blah, blah, blah. What Trump's going to call him, whether it's a loser or too late to the party. Jerome Powell. So that's off topic here. Thursday, we'll have a bank holiday. Some of the markets are closed. Few of the markets are open. And then obviously, we'll want to pay attention throughout the weekend. Does this escalate? Does this die down? So when you get to Sunday night, I'll be at the desk at about 5 p.m. when the market's going to open. I'll hang out for a few minutes if the market really stirs up and starts to get crazy, or if futures are indicated to point several hundred points lower, like on the Dow and things like that we track in the over-the-counter markets. Then I'll be at the desk. So if you need anything, you can reach out to me then. And then just remember that, futures option trading, it does involve risk of loss. It may not be suitable to all investors. And one thing I didn't touch base on, obviously, we're going to be watching the tariffs, the geopolitics, the exchange traded funds. They added 181,000 troy ounces of gold. They also added 1.25 million ounces of silver in their holdings here. And then they started to cut platinum. So that's why I'm saying that could be a blow off top here in the platinum market. So we'll want to keep an eye on that. So again, you got any questions, reach out. Remember, futures and option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading. Go get them.